of us here want to know that how a luxury brand deals with investor behavior in India. I mean, you've raised PE funding from investors like L Capital, Sequoia, and Mayfield. So, share some experiences that how do investors look at a luxury brand, and what have been your experience?
We've had private equity in our business since 2007, when GM Financial invested in us, which subsequently sold out to Sequoia, Mayfield, and Silicon Valley Bank. I think at the end of it, for most investors, it's all about returns, right? They're only looking at one thing, ROI, ROE, whichever way you look at it. Having private equity on your business and on your board adds a lot of financial discipline for sure. I think also when you're building brands, you've got to take a slightly medium-term perspective. I wouldn't say a long-term perspective. There's always a trade-off between a short-term profit and a long-term investment in a brand, which is apparent. In the consumer space, the investors on our board, some of them are more used to dealing with, let's say, technology companies, and we're a consumer space. So I think it's been a happy balance. We've shared a very good relationship, I'll say, with most of our investors. I think there's a balance with private equity and a promoter in everybody's goals, but really the common goal is an appreciation of capital.
So, I mean, do you aspire to be at a certain scale that you're waiting for an IPO to come? I mean, what's the criteria that you're waiting for the IPO?
So I think it's a mixture of multiple things. You have to have certain financial scale for sure to hit a market to be of certain consequence. B, I think the organization needs to be ready in terms of going through an IPO is a milestone in your business, right? So your core team needs to be ready with all the regulatory things, the mindsets around it. You're taking on further responsibilities. I would say it's a mixture of an emotional and financial decision.
And also, very interestingly, you have homegrown brands, and then you also have another set of brands. So, as a CEO, when you think of going through the next phase, next wave of expansion, how do you divide your focus between the two? And going forward, what will we see from Genesis Colours in terms of expansion?
So let me put it this way. When we were expanding Satyapal a few years ago, we were in the dilemma of either taking the brand global or bringing brands to India. And I believe our forte was in understanding the Indian market. Okay? So for me, the expansion is India, India, India. So I don't think the dilemma is what to concentrate on. Each one has its own sets of opportunities and challenges. Satyapal being a brand targeted at Indian ethnic wear, we are able to distribute it and retail it far further than a luxury brand which is available only in, let's say, 3 or 4 cities.
Okay.
Okay? So I don't think that's a challenge in where you can focus your business.
Okay, and you've also thought of taking your homegrown brands to global markets, and how is that?
I think there's just so much growth in India that we don't need to do that. Yes, 5, 7 years ago, it was kind of cool to be opening, stores in London, but there's a huge market in India, right? So I think there's enough to be done in this market itself right now before worrying of the rest of the world.
Okay. And you also mentioned home shopping, but there's another area, luxury market. There are a lot of e-commerce websites also, and they have fancy discounts on luxury brands. Do you see, how do you see it impacting your business, or you think that both the models will coexist? What is your perspective on that?
So e-commerce is very different from what we call as home shopping. What we call as home shopping is somebody wants to buy 5 sarees, they get delivered to their house, the lady of the house tries it, gets feedback from her sister-in-law or mother-in-law, and then makes a purchase, right? In luxury, there's still a touch and feel factor, which is very important, which may not come across as an e-commerce business. Okay, so it's a different model, it's a different market. I'm not here to comment on that. I do know that market is growing very well, and we do have our own e-commerce business on Satyapal, but it is not a significant amount of our business right now.
So, if you could throw a little bit of light on that how have the JVs helped, like the one with Burberry? And in the coming future, will we see more of that route for Genesis Colours to expand?
We have 2 JVs right now. We have a JV with Burberry, we have a JV with Canali. JVs take a longer term perspective of the market. They're usually in excess of 10 years. JVs work well when you have a long-term perspective and there's a lot of investment going in the business. So two parties are co-investing in the business. I wouldn't say there's, whether you do a JV model or you do a distributor model, it really depends on the outlook of the brand for India, how aggressive you want to invest in the business, and how much control you want to have in the business. So I think both of them happily coexist. I don't believe one is superior to the other. It really depends on the outlook for the brand itself.
Also, going back to the larger picture, I mean, can you share the top line with us and in terms of what you're targeting for the future in terms of revenues or if, outlets, scale, if you could have some numbers on that?
Currently, the current year we're doing roughly about 350 crores of top line.
Okay.
Okay, we've been growing roughly at about 35% per annum.
Okay. Over the last few years?
Last couple of years.
Okay. And also, looking at some global markets for luxury as a brand, where do you think, like suppose take China for that matter, how far do you think India is as a consumer market from China as a consumer
15
market?
to 20 years behind China. If you go to China, the infrastructure in China is incredible. Most luxury brands have between 50 and 80 outlets in China. China constitutes, let's say, 20% of the world luxury market. I don't think India even constitutes 1% of it right now. We're just at nascent stage, right? We've just started consuming in the last few years. I mean, India opened up its market to the world trade in 1991. China opened up in 1978, and they really went through a large amount of consumption in the year 2000 onwards. So it took them about 20 years before they went into consumption mode. We're starting the consumption mode today.
You would say that scale is one of the most important things in the luxury market right now?
Scale is very important. Scale, infrastructure is very important.
Okay.
Where is infrastructure to open more brands?
Okay.
I mean, we started off with hotels. We've got all of 3.5 luxury malls in India right now.